This is the Future Driven podcast. So I want to know, Raphael, at the end of it, in the future, what will you be driving?
My whole thing will be, driving the mission of helping those that don't conform in this world to get into equitable positions in real estate and help them climb out of this, this society that they feel that they might be stuck in, or part of society that they feel they might be stuck in.
Welcome to Future Driven. I'm Adam Lejenkop, and on this podcast, we talk about challenges and wins in business. See the vision, drive the future. Welcome to episode 49 of the Future Driven podcast. Today, I've got Raphael Bennett from HonestDeed. Raphael, thanks so much for jumping on today.
Yeah, happy to be here. Pretty stoked about having a conversation with you.
Yeah, me too. So found you on LinkedIn, saw you had a very interesting profile and just an interesting business, and wanted to just really dive into your background. And of course, we'll get to HonestDeed here in a minute, but why don't you give us a little bit of the lay of the land, what's your background, and what kind of led you up to kind of where you are now?
Yeah, sure. So I'm an engineer by trade. I've always, led the technical side of any business I've been involved in. And, I've mixed that, with an interest in entrepreneurship. When I graduated from college way back in the day, nobody was really hiring. So I really had no choice but to be an entrepreneur. So I was picking up like little freelance projects, for, just basic coding, and ultimately, found myself into a situation where I was building a product. And after having a good experience in doing that, I never really went back. Technically I've never been hired, only through, acquisition, I would say.
Well, you're a true bred entrepreneur then. And I saw that you're listed as CTO and CEO. So you've got that technical background. And you just mentioned you build products. So what are some of the products you've built throughout your career?
Yeah, so initially started my career building a VR product. It was, kind of before its time. I built, my team and I built a web-based VR authoring platform. So without any special software or anything else, you could build these, virtual environments, kind of like Google Street View, but for indoors. And then we also had kind of a little twist, which was, exporting scenes out of like 3ds Max out of spaces that didn't really exist, and getting those, onto the web so that people could explore them. And the quality of them it was so real because we pre-rendered all of the what we call, textures. Most people couldn't tell that the space wasn't real. So that was WebWalk. I built that till about December 2015, and then moved on to my next project, which was a social media management and crisis management over social media for pretty much every super luxury hotel brand in the world. That was BCD Social. And I worked there as the chief technology officer, refactored, an offshore engineered platform, that and grew that business till about, I want to say it was June or July 2019, and then we sold that to RateGain, which is a public India-based company.
Great. And so then, was it just a couple of years ago? How did HonestDeed come to fruition? Obviously it sounds like it. You've been developing products, so it's probably been something you've been thinking about for a little while. But how did that really start to come fruition in the last couple of years?
It's kind of a really crazy story. It goes back to, a different time in my life where my first son, my oldest son now, was really sick, and he's fine today. You never know that anything was ever wrong with him, but he went through 2, cancer battles, and my wife and I, we found ourselves into a situation where we were spending everything that we had in order to save him or take care of him, whatever you want to call it. And eventually we ended up into a situation where we, I basically called all of our creditors and put them on notice to let them know we had a bumpy road ahead of us. And it was kind of in that process where our lender at the time had, painted this beautiful picture of like, hey, this stuff happens all the time. Don't worry about it. Fill out these forms, disclose your financial situation, and you're not going to lose your home. Everything's going to be fine. So my wife and I, we did that. Very stressful time for us. And essentially what happened is 4 months later from that conversation, we got a knock on the door from the sheriff, and they served us a foreclosure notice. So while we thought we were going to be, this thing would be managed and we'd be taken care of, we found ourselves in kind of a foreclosure situation. So, I've got a sick kid. I had a business that, that was just telling you about WebWalk that was just kind of, barely surviving, new to the scene essentially. And now I was risking that I was going to lose my house. So kind of pretty tough times, for me and my family. And so in the hospital, there's this gentleman that was the grandfather of a kid that was next to ours. And I was kind of sobbing it up and kind of, explaining the situation that we were in. And he basically said, hey, if you're going to lose your house, you should try to find, a way to buy a home with seller finance terms so that if you did lose your home, you'd be able to move in that. So essentially what we did, I went out and found a family that was willing to seller finance a home without any, credit check, or it was just like an agreement between two people, kind of like in a rental agreement. And I rented that property out month to month. And in the event that, I could just give notice and say, hey, we need to move into the property. So that was my first experience with seller finance. And from that point, we never really needed that property. But leading up to that, I had to defend myself from this foreclosure case. And so every day on the way to either the hospital or to work, I know it sounds crazy, but I would stop at the Daily Center on the 9th and 10th floors, if I remember correctly. And it's where all the foreclosure proceedings were. And this was in 2000. This is in 2010, I want to say.
Okay.
And so I'd walk up to the 9th and 10th floor, and I would just sit in these foreclosure proceedings and just observe. If I was going to try to defend myself, I had no idea how the proceedings worked, what kind of defenses there were. And, after days and days, it's people just getting, judgment of foreclosure left and right, losing their homes. But every now and then there'd be an attorney that would have, some kind of defense that would kind of pause everybody up. And so I'd jot down the case numbers, and I would go down to the law library, pull the cases, and I would take pictures with my phone, all of the, case files, and I would read about them. And it kind of led down this crazy path of, the right to challenge, the right to foreclose based on securitization and all of these other little, nuances of the mortgage credit industry. I just found it fascinating. So being the curious engineer that I am, I, started prying into that and doing research, and I became, I think very versed in the conversation and the flows of how all that worked. And, as an engineer, you kind of have this conversation with yourself, which is hey, I think I can do that better. And if I ever find the opportunity in my life to make a difference there, I'm totally going to do it. And that's essentially what happened. I had thought of this idea, 10 years ago. It's just I never had the opportunity to really, one, fintech wasn't where it is today. Technology isn't where it is today. Society isn't as comfortable with fintech as they are today. And so timing, I think, was everything, but opportunity and preparation kind of, collided. And that's what, so I guess you would say my affinity for software engineering, finance, and economics kind of all collided and came together, and boom, HonestDeed.
That's awesome. Well, first, thanks for sharing that story. And it's really great to hear that, through life's adversities, something so positive comes out of that. And for everybody that's listening and watching, can you give us a little bit of a simple breakdown of fintech in that whole world today? Because I think there's some unknown exactly what that means, and would love to kind of hear your take on that.
Yeah, I think that, fintech is essentially, in my perspective, the distance or, distancing ourselves from reliance on institutions to transact, right? That to me seems to be, from a consumer perspective, what fintech means. It's just less reliance on the institution. And that's either good or bad. I mean, I really don't have an opinion there. I just think that fintech gives most normal folks the opportunity to take things into their own hands.
Okay, that's great. So then let's dig into a little bit about HonestDeed, because, so that's, give us a little bit of the premise and how HonestDeed works and how it helps other folks not need to rely on normal institutional banks.
Yeah. So, seller finance is exactly as it sounds. Today, the classic example is that today, when we buy a piece of property, the common knowledge is that, we have income that allows us to afford a certain payment. And then we take that, that information, we present it to, a lending institution, which is your local bank or, an internet bank. And we make the case to buy a piece of property based on, the income that we're able to generate, right? So it's a loan against your income secured by the home.
Yeah.
And so that's a traditional process that we normally take. And seller finance is more or less where the seller steps in as the position of the bank. And the benefit to them of doing that is, one, they take on some risk for sure. Any investment essentially is risk, but they earn the finance charge that we normally just let go of when we take a lump sum payment, from our buyer. And so this can be, there's a lot of benefits of doing it, especially from a taxation perspective, from a retirement perspective. There is no better way that I know of where you can take, equity that you've earned over time and immediately convert it into an asset-backed cash flowing annuity. Just there's not a lot of options out there for, the non-sophisticated to do that.
Yeah. So does Indeed then walk you through the process? And is that how they're walking both the buyer and the seller through that?
Yeah. So not Indeed, but HonestDeed.
Sorry.
Yeah, no worries. You can cut that out, but,
we just posted a couple of job postings. So that's probably
what you did. Yeah. Nice. So, so essentially what we do is we provide, this is relatively, like real estate transactions are relatively basic transactions. Typically what happens, you have, two parties come together either individually or with a realtor, or one realtor, one without a realtor. I mean, there's many, many ways, or they can just come together with their attorneys, and through the involvement of a title company, open an escrow and, identify, hey, we have this piece of property. We're going to change the title. This is how much I'm going to, sell the property for. I'm going to loan the money to the buyer. And these are all the people who are going to get paid out. And it's just kind of all sorted through, in terms of who gets what and when. And then the transaction gets recorded at the recorder of deeds. And then it goes into maintenance or servicing where, the buyer pays the seller, who the buyer is now the borrower and the seller is now the lender. And that process is pretty straightforward. Where we get involved is from the perspective of providing a really good, big bank rivaling experience for people to make payments, manage, property taxes and, have some, projected information about their property, home values, stuff like that. And then from the seller's perspective, who is, technically the lender at this point, we provide them with some tools that help them, access liquidity, stay compliant, and self-service this arrangement without the need of, involving what we call like a servicing company. Servicing companies come in a lot of different flavors. Some are great, some are terrible, but usually the relationship between borrower and service company are neutral until something bad happens, right? And it's kind of always, in my opinion, better to get to the source, the ownership, the two people that matter, the borrower and the lender, to kind of resolve or negotiate, any kind of things that bad, anything that goes wrong that could be bad in the arrangement. So that's kind of where we fit in. We're really a tooling company at the end of the day. We do have our own form of seller finance. So traditional seller finance is the same, arrangement that you would get at a bank. And we have an arrangement that's a little different, what we call the HonestDeed. And what it does is it kind of breaks the transaction up So every payment is its own instrument. And the seller of the property can sell off those little instruments to other buyers so that they can access liquidity in the event that they need it. Most people are afraid to sell or finance because they think there's no cash liquidity into it. And that's really, at the end of the day, the problem that we're trying to solve. We're trying to, one, make it safe, make it modernized, because most of it's done with spreadsheets and snail mail.
Yeah.
And then just trying to normalize it by reducing risk for both parties. So,
yeah, it's a big challenge, but you're on the forefront of, I guess, changing a lot of people's minds and comfort with this type of lending.
I think, like, here's the thing: when somebody actually looks at the economics and they realize, like, oh, I'm selling my home for $500,000, and if they would have stayed into the transaction, for the full duration, they'll earn another $750,000 in financing costs, right? And we don't even think twice about it, but we're giving up a great opportunity, especially if we don't have a need for the cash. We're giving up a great opportunity to having, a relatively low risk, asset backed. So if the market crashes, you have an asset that you're familiar with that you can either keep, resell or finance, rent, or you have many options. And I think when people see the economics in a piece of paper, with their own eyes and their financial advisor, it's just like, wow, what have I been doing all of these years? Just letting people come in and just finance my buyer when I could have done it myself, And that's what kind of drives me and my team to keep doing this, is because it really is a relatively revolutionary, especially from a retirement perspective. You have these folks that are, think they have a retirement gap and are looking at reverse, mortgages and whatnot. And they can do a seller finance deal, move in, downsize, and totally solve any kind of retirement gap that they may have thought they had.
So your target market is the seller, and it is a seller that doesn't necessarily need that equity right away, and they're looking to invest back in with this seller finance kind of strategy.
Correct. So they take a first lien position just like a bank does. Their investment is in the interest that's generated. And it gives them, when you think about, capital gains, for example, if you have, somebody in, for example, in Austin that has, $750,000 in equity, and they only have a $500,000 exemption, you only pay capital gains on the principal that you've actually captured. So when you do an installment sale, like a seller finance deal, you can exhaust your $500,000 capital gain for 17 to 20 years before you actually ever start paying capital gains. So you actually, exhaust that exemption. And, when it, for example, retired folks, that's a big deal to them, being able to use that exemption before they actually have to write, $1 today is worth more than $1 tomorrow. So anything you can do to push those, paying those capital gains towards the end of the transaction, the better it is for everybody that's in that situation.
You must have a lot of people that say to you, what's the return going to look like versus investing in the stock market? Obviously a little bit more volatile, but how was that? What is your kind of general response to that?
Yeah. So, I mean, some of these people are going to get, 5 to 7% IRRs, right? And those decrease over time because the principal balance drops as people, get deeper into these transactions. And it's totally true. I mean, in terms of, you look at people as either sophisticated or non-sophisticated. If you're sophisticated and you're an investor and have a lot of confidence in the market, then take that capital and go dump it into something that's more sophisticated, that in which you're willing to take more risk, right? The market vaporizes there. There's nothing left to grab, right? It's gone. Yeah. With a piece of real estate, it's, a very non-sophisticated person can feel comfortable with it. They can see it, touch it, drive by it, whatever. And yes, they will generate a smaller yield, but if the market vaporizes, meaning that their buyer can no longer pay them anymore, then they can recapture the property back and do it again, right? And there's something to be said for, most people aren't sophisticated investors. And so when you have somebody that's like, hey, I can see it, touch it, drive by it, I know it's there, it's not going to run away, I'm more comfortable with that than I am just taking my capital, pumping it, giving it to a financial advisor or pumping it into a market. That'd be, crazy for somebody that's not sophisticated in that space.
Yeah, so it's really that asset-backed investment, like you said, where you've got the ability, if it vaporizes, you've got something physical that you can work with again.
Recapture, yeah. And the other thing too is like, with everything that's happened and the industry, just based the banking failures, I think our society is basically has a little less trust in the banking industry than we did, 2 months ago. Right. And so I think that's where I think fintech will sort of emerge, is where, people can manage these opportunities directly. They have more of a pulse. Like there's a lot of people that lost a lot of their net worth in investment products and these bank failures. And it's not a cash thing. It's not deposits, cash in a bank. It's actual investments that aren't covered by the FDIC. And so this, for example, would protect you from those types of, scenarios.
So last little bit on HonestDeed is this primarily a SaaS product that the sellers work with, or is there actually advisors, humans that are working with the sellers?
Yes. So we have a myriad of services. We basically do everything seller finance. So we don't advise, we're not financial advisors, we're not lawyers, we expect people to come with their own advisors. But we are a great strategist, right? So we don't advise anyone. We basically say, hey, given your situation, based on what we know, if this were me, this is what I would do. But validate that with your attorney and your financial advisor and make sure that, this suits you. And I don't expect that we'll really start getting into, providing those types of advisory services anytime soon. But essentially if you look at, the kind of let's just say like the bar stool, if one of our mentors is like, yeah, you've got like a bar stool business here, which is like, you have a buyer, you have a seller, and you have basically capital, right? And so our platform basically brings those three components together. If you have a buyer and for whatever reason they don't conform through the traditional lending, arena, then they've got to find some other way to get into homeownership, whether it's a rent to own or a seller finance deal or whatever. And the hardest part is actually finding these properties. So we provide an experience on our app. You can download it today. We're in, about a handful of cities, 7 different metropolitan cities, where folks can look for what we call high equity properties that are either on market or off market. And then we make it really easy for these buyers to, to put together a proposal quickly that fits within their budget, and they can deliver it either by hand through USPS, or they can hire us to deliver it with like a box of cookies or whatever. And say, basically present the proposal to the property owner and say, hey, if you're ever looking to sell, I would be willing to buy at these terms. You do that 50 or 100 times, somebody's eventually going to say yes, and that's where your opportunity resides. From the seller's perspective, the person that owns the property, they need tools to be able to manage the arrangement and access liquidity, taking their future payments and convert those into cash today so that they can solve whatever immediate problem they have. Our tools connect with private investors. So these are either, all accredited folks, where we have about 4,000 of them inside of our platform today. And anytime we have a seller that's like, hey, I need liquidity, they hit a button, we blast out to 4,000 different, investors, and then they can reach back out and say, hey, I'm interested. What do you have? Right. And then we bring those two people together and they transact, independently outside of us.
That's great. So you touched on a little bit about the future of fintech and of course the future of HonestDeed. But what do you see over the next decade, knowing that so much has happened in such a quick time? You would know better than me, but it feels like the last couple of years things have really heated up. But what do you see over the next decade for fintech as a whole?
Well, I see a lot of consolidation. That's for sure. You have a lot of products that, solve very specific needs in the market. And I think those will eventually start to roll up and kind of rebank, I think is what I would call them. Basically what fintech is doing is it's compressing the time, the complexity, and the cost associated with, traditional institutional banking, like the moving capital around, asking for capital, in terms of borrowing and lending. Fintech companies are solving a lot of those problems in their own way, dealing with risk in their own way, and it's putting a lot of compression on the institutions. And I think the institutions will probably start moving away from consumer, and then we'll see a new era of, digital banks or, consolidate and come together and be kind of like the consumer bank, but at much better speed, much better risk management, and, much better service for consumers.
So then tell us a little bit about where you see HonestDeed fitting in the future of everything that we just talked about.
Yeah, I think that, it's really hard to tell where exactly we will fit in. I think ultimately, our business is all about reducing friction to access liquidity from either the lender side or the borrower side. The lender has debt that they might need to sell off to get cash, and the borrower has equity that they might need to sell off without taking on another payment to access cash, and managing, that activity so that we're not putting either the borrower or, the lender or the borrower at risk is kind of, I think, going to be our sweet spot, because there's an LTV, between buying or selling off equity and selling off debt. There has to be enough value in the middle of that transaction to protect everybody. And so I think as we figure out where we fit in is going to be, helping people privately bank their equity and their debt to other people that want to be involved in it. I think that's where we kind of fit in. Now I'm hoping that we just, gobble that chunk of business, so we become the go-to for, privately banking your buyer, because there is a lot of benefit in that for sellers.
Well, yeah, for sure. And I've learned a lot just in this 30 minutes with you, and I feel like there's a lot more to come. And I look forward to seeing HonestDeed as on the forefront of all of that, and really helping educate the public on this, and really being the solution for those that are interested in seller financing.
Yeah, I'll lead it with actually one thing that I think is really important, which is, people ask, like, well, why would somebody want to seller finance? And the reason being is because not everything fits within a 15-year or 30-year container or with one interest rate, right? And so when you bring a buyer and a seller together, they can actually negotiate the interest rate, the down payment, and the term. And so with a seller finance transaction, you might have a buyer that's like, hey, in order for this transaction to fit within my, my budget, I have to do a deal that's, 34.5 years, right? So 34 years, 6 months. I have this much for a down payment. And would you be okay with the interest rate starting at, 8% because I'm more risk now, but over time, would you be willing to drop it every month to 4% until I get 15 years in the deal? So seller finance gives both buyer and seller a lot more flexibility over the transaction, and, from a cost standpoint, a duration standpoint, and a dollar out of pocket today standpoint. Entry cost is what we call it. So I think that's one thing that was really important from, me being an operator of a, seller finance, type of business, is to put that out there so that folks can at least, pro and con it out as to why somebody would even be interested in this.
Yeah, and that's so great. Technology and your platform together, giving people that flexibility to, so we're not so tied into the traditional kind of 15, 30 year, Lincoln mentioned. So that's amazing. So, and that I can see that being way more beneficial in the future as technology every single year just keeps getting better and better, faster and more flexible.
Yeah, I agree.
Yeah. So, I'm looking forward to learning more, and this is the Future Driven podcast. So I want to know, Raphael, at the end of it, in the future, what will you be driving?
In terms of
I leave it pretty open-ended. Obviously some people go towards automobile, but it could be company-based. It could be mission, but what will you be driving in the future?
I mean, a bike, right? Bike is the ultimate freedom. Operate under your own power. No, I think that my mission is really about, access. I think homeownership has a lot to do with not only just building equity and everything else, but it also has a lot to do with like mental health, right? All of us people need a refuge. And I think there's a whole tranche of our society that's gotten left out from a banking perspective. And I'm really passionate about this topic of like small dollar mortgages. So banks aren't writing small dollar mortgages. So those that don't have, significant incomes are being left out of the purchasing experience, and therefore they're left to rent, and they never really build any equity. And they get kind of pushed out of these areas that gentrify over time. So my whole thing will be, driving the mission of helping those that don't conform in this world to get into equitable positions in real estate and help them climb out of this, this society that they feel that they might be stuck in, or part of society that they feel they might be stuck in.
That's awesome. Raphael Bennett, CTO and CEO of HonestDeed. Thanks so much for coming on the Future Driven podcast.
You got it, man. Thank you.
Thank you.